Hey, welcome back to The Market Investor. I'm Daniel Snyder. Thanks for joining us for another one. This one is going to be super short, super sweet, one topic alone that I think you should kind of know about because it really does help us give a good gauge as to what's going on in the market. And there's a reason I use the word gauge. We're talking about the VIX, the VIX, the Volatility Index that studies the 30-day future volatility in the markets. Right? So it tries to predict what is happening in the next 30 days. Why is it important? Because it has become a standard as to what we call the fear gauge. And it pretty much predicts, hey, what are the price swings going to be? So let's talk about the volatility. Volatility is how much something will move up or down. Typically in the market, it doesn't move that much. It's pretty standard, it's pretty steady. It's only right now because of the coronavirus that we're seeing these huge volatile swings. You're seeing the Dow jump up 1,700 points and then jump up another 1,600 points and then fall 300 points and then fall 2,000 points. I mean, I'm not sure the 2,000 point happened, but if it did, people would be running for the banks probably to grab their cash out. But the volatility swings is just nothing that we've ever seen before. So we use this VIX index as a fear gauge of the overall market, which is often referenced by institution, by big firms, and has kind of become just the standard of the market. So it's something that you should be watching as well. So here we are in Thinkorswim, and this is SPY today. You'll see my Fibonacci. We ended around 280, which is right here around the 50% retracement. We'll go into that later. But here's the VIX. You'll notice the VIX is down at the bottom because I sort by volume in my watch list. And why is it at 0? It's because we can't buy or sell stock on the VIX. However, it is worth noting that you can buy and sell options as well as futures, but you cannot buy or sell stock. So as you see right here, the VIX over the last few years was generally pretty low, but I do want to show you this. If I go to the 5-year, and actually let's make that even longer. If we come into the time frame, let's take it back 15 years, because I want you to see this. This spike over here, it's easy. It's the financial collapse that we had back in 2007, 2008 and onward. And this is the fear gauge, right? So when it all started to collapse, we saw normal day. Here we are on August 18th, August 25th. It's starting to increase a little bit. September 1st, we get a little bit higher. And here we go. This big pop day right here was October 6th. And then this just, I mean, the fear gauge just tells you what's going on in the market, and it takes a while to kind of fade out. So here we are with coronavirus. The moment we started to realize that the coronavirus was actually kind of a big deal here in America, as you'll see on the screen here, at the top, I'm looking at it, February 24th is this first big pop. And then after that, we all know what happened next. The market tanked. Here it is on March 23rd. 2020, when we finally started to see it hit a little bit of a peak and pull back. So I think over time, as we get more information about the virus and everything else, you'll start to see this fade out again, just like you did after the financial crisis. So the VIX is something that does give us a lot of insight and a lot of good information as to the overall feel of the market, what people are thinking kind of psychologically. And that's a huge component of trading and investing, is just understanding the psychology of everybody else and what is going on in the market. But that's all I wanted to talk on this one. Is it's one indicator out of many that a lot of people use to try to like evaluate what's going on in this moment in time in the market and try to help predict what is going to come next. Now, keep in mind, no one can tell you what's going to happen in the market, right? The market does what the market wants to do, and nobody can change that unless you're the Fed and you want to pump over $2 trillion. But even that's temporary, right? So over time, we'll see the VIX start to fall, and as the VIX falls, people will feel more at ease at what's going on. The fear digresses. They don't feel like they need to run to the bank and pull their money out, and they'll start to put money back to work. Any money they have sitting in cash and just being liquid, these hedge fund managers, these institutions have to put that money to work in order to make the returns for the year. So you'll start to see the money flood back in, and I think we'll really start to see a stock market rebound. I don't know if it's going to be what shape. You know, they're talking about the V, the U, the L. We're just going to have to wait and see at that point. But this is just something that I think all of you should look at and keep an eye on as we move forward. So that's all I have for this episode. I really hope you learned something new. I hope you'll subscribe to the channel, and I'll talk to you in the next one. Make your money, make your profits.